Alright, welcome to this video. So today I wanted to talk a bit about the concept of liquidity and swing highs and swing lows, because I think it's very important to understand how it works. I use this in my trading very often, and I wouldn't be as good of a trader as I am today without this concept. So let's dive into it. So liquidity basically is the ability for a market to be traded at a certain price. Generally speaking, a market that is not liquid cannot be traded efficiently at a price level, because every buy order there needs to be a sell order. And if there are not enough sellers at a certain price, the buyer cannot buy at that price. In general, Forex is very liquid, so we don't really have that problem, but there are some asset classes that have this problem, and especially if you're pushing big size, this can be an issue, because then you can push the market against yourself. So big players need a lot of liquidity. Otherwise, they will just buy at a place where there are not enough sellers, and then they get a worse price, which means they are immediately in drawdown. And that's something they want to avoid. And how do they do that? They do that by activating the counterparty. So if they want to be long, they trigger sellers, and if they want to sell, they trigger buyers to enter the market, so that there is enough liquidity and they get a good fill on their order. One of the ways it's being done is by breaking important swing points. Let me illustrate one very obvious one. This one. As you can see, when price went to the swing points, there was a big reaction to the upside. So to me, this is an important swing point, because there was a lot of buying action, and these kind of moves cannot be created by retail traders. There has to be someone strong with a lot of capital that buys here. So I mark out these levels, these spots on my chart, and I wait for price action to come back to this level and see what happens. And as you can see, price just broke it and then again made a strong move. And that breaking of this low is what triggers sellers, because you have to imagine that if people are long in let me draw it in. If people are long in this area or in this area, their stop losses will be most likely below this low. And a buyer stop loss is a sell order, because when the price gets back to the stop loss, you sell below market at a lower price, and that's what causes the loss on your buy trade. So these are forced sell orders, these are stop loss orders. Then you also have a lot of breakout traders that trade to breakout. So an important low is broken and they sell, thinking we get another move to the downside like this. So you have active sellers, people that think the market is going to short, and you have forced sellers, people that were long but got stopped out. And all these sell orders can be used for the big player to enter long. And that's why the price just broke the low, triggered all the sell liquidity, and there was enough liquidity for the big player to enter long once again. And that's why we got a big reaction. And this is the daily chart, but it happens on other time frames as well. I traded on the hourly too. On the daily chart, I mainly use it as a bias, but that's the concept very explained very briefly. We just had the same thing just yesterday. As you can see, this was an important swing low for a couple of reasons. As you can see, this was the first important one. It got rejected here, and we got a nice reaction of it. Then we made this important low, and again the low broke, and look at that reaction. It's very big. If you enter those on the hourly, you can get a very nice trade. Here as well, This one is a little less obvious, but still important. As you can see, quite a strong reaction. Price comes back, takes out the low, triggering the sell side, a liquidity, and then another move to the upside. Same thing happened here. Look, we broke it, we closed above, and another reaction. And that's very important. The closes of the candles, especially on the daily time frame, can be very telling, especially when you look at these areas. So strong swing points, important swing points to the markets. Just like this one is an important swing point. I want to see what happens once price gets back to this level. Do we get a close through, or do we get a quick move to the upside, close below, and a rejection? And if that happens, I'll use this as a bias and go short. So you really want to look at the important swing points, not just any swing point, but the ones that were important to the market. The ones that really caused a violent reaction. Let me zoom in, maybe I can find another one on the hourly. Yeah, this is the one on the daily. Look how strong the reaction was. It's a very V-shaped move, which indicates very strong demand. It just broke, closed above, and there we go. And that happens time and time again on every time frame. So you really need to learn this concept, and it can be very beneficial to your trading. Use another one on the hourly. It's a bit smaller, but the high gets taken. Same thing here. The high gets taken, close below, and it goes to the downside. And yeah, this is basically the concept. So you have one unbroken high, another unbroken high, which means there will be some stop losses of people that were short above this area. There will also be a lot of people buying this breakout, because if you look, it's quite a big level, a big zone. So a lot of people will be buying once it breaks out. You get your breakout, but it fails, it closes below, all liquidity has been used, and as you can see, there's a very strong reaction to the downside, which can only be caused by a big player, by someone with a lot of capital, and you want to be on his side. You don't want to be on the side of the retail traders. So hopefully that made the concept of liquidity a bit clearer. There goes way more into this, but this is just the basic idea. And if you want to use it in your trading, try to mark out these important swing lows on the on the chart, and try to look what happens once they get broken. So yeah, I'll speak to you guys next time.